shares. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 25th of March. And we're looking at the Dow down 47 at 42,534. So I said to subscribers, in my newsletter, I said that we'll see by Wednesday. I'm anticipating a rally into Wednesday, and that's going to be the test. And also we'll be able to discuss I'll do this. Let me go right from the very beginning. No, let me just do this. I'll run the numbers, and then I'm free to do whatever I want. Down 47 to 42,537 in leg C in a V-shaped pattern rather than the bouncy successful H pattern, but we haven't done that. It's V right now. SPX.X, this is the S&P's trading. S&P is trading right now. It is up $2 at 57.69, and also very strong leg C in a V-shaped pattern. Oh, I didn't finish doing that. All right, doesn't matter. So we only have a little bit of the shorts. We've taken out almost all the short positions. We just got a kind of a little bit of insurance there for the Dow and the S&P. But basically, we went 3 times along the Dow. That's the UDOW back again into that position. And even more important than that, let me just check something here. I just wanted to show this here. Look, there was a peak E in the 5-minute chart of the E-mini, and there was also, let me just do that. I'll cut that, and I want to put that in there. Okay. So what I want you to say is that 200-period moving average is really important. Look, in the 1-minute E-mini, I want you to show this because this is live. We went to like a double top, 2 peak Ds, one at 8:30 and then one again at about 9:20. Slightly lower down, 58. There was a Denner that said it went short at 58.33. I thought, oh wow, all the peak Ds in the 1-minute chart, 5-minute chart, peak E, possibly in the 10-minute chart, and lo and behold, what do we have? We have a very sharp move down. Now we're going to try to test the 58.22 level of the 200-period. The reason why I'm saying this is that you can see this morning from nothing, there was this beautiful down channel. And we do this so often in the futures, overnight, after 4 o'clock. Look, there it is, 4 o'clock close. And then the market has this, after a spectacular session, it then goes sideways in a narrow trading band. Usually it's not this slight declining channel. It's usually a horizontal channel. And then it breaks out. All of a sudden, at 4 o'clock, I was here. I was up early this morning at about 5. And I'm looking, I thought, oh, that is good. Look, 9-period moving average across the green. And it's broken the down channel. And it went all the way to a high today of 58.34. There is buying coming in here, and it's hard to explain because there's still that choppiness. I had a question from a subscriber saying, I'm tired of waiting for the Fed. And I keep saying interest rates are not the issue. It is only tariffs that are really scaring the market, and you've got to deal with it in a way that says one thing at a time. Let's just focus on what is absolutely important right now. Is the rotation through different sectors with the tariffs on and off for 25%, 50%, all that sort of thing. And that's what, remember, market always deals with uncertainty. It just hates uncertainty about uncertainty. And that's kind of key to me. And more important than that, let me just get this in here, give it a little room. 3. Okay. And more important is the fact that there are some areas that are doing really well. So QQQ. The QQQ right now is up $1.31 at in 90. This is good action, extending the leg B. It's only in leg B, just pushing away from the 200-period exponential moving average. That's going to be very important. The weekly chart is not that great, and the monthly chart is very good. So let's go to the IWM. The IWM is the Russell 2000. 208.29, down 57, struggling a little bit, but the chart pattern will improve a lot if that 9-period moving average can actually cross. If it can cross positive, that'll be very, very good action. In the meantime, what we're looking at is the weekly chart hit at 197.00, round number low. It hit that, and we've had two pretty good candles in the weekly chart, but wow, it needs a lot to improve. Okay, with that said, I want to go to the SMHs. The SMHs Semiconductor Index didn't do very much. It did okay yesterday, but nothing like you'd expect the usual from the semiconductors. They're usually the stars of the show, and at this particular point, they're doing a little bit of struggling, and I think that's going to continue a little while longer. I just want to raise that there to 21. Okay. Now what I'm looking at is, what I'm looking at is that I don't want to go through the different semiconductors. I want to just continue here to say gold moving up nicely, up 21. I still see gold is holding its own. It's still the area that many countries, just the big money seems to be going in. It's going to wear out at some point, but right now it's doing very well. Look at silver. Silver is continuing higher. It is up 78 cents at 34.23. And as I was saying, the Chapman wave methodology, a peak C invariably will go to a peak D, and we haven't got there yet, and that means it should try to get to 35. So 34.23 right now. Let's go to high-grade copper. High-grade copper, nice move up, leg D, up 0.08 at 5.18. Very nice action, leg C in the weekly chart. Remember, we're always looking for Ds in a buy mode. Let's go on to crude oil. Crude oil is up 39 cents at 69.50. A very nice move from the lows in the 65s coming to the 69s in crude oil, because it's just been on its way down, lower lows and lower highs. Now it's making higher lows and higher highs. I'm watching it closely. That takes me to something that I would talk about in a moment, but I also want you to go to the bonds. Look at this. The bonds are down 3/32. The TLT, look at that. It all hasn't taken out the left side low, but the U.S., the bonds themselves, the futures, continuous contract, that's taken out the left side low of earlier in March. So that's not good. Okay, next thing I'm looking at here is, yes, I want you to check out there. Now, I'm just going to do this very briefly. I'd spoken about this. I talk about internal lows, residual lows, internal highs, residual highs, and this chart says it all. This is my Chapman Wave Dark News Index, DNI. I use it only with the Dow daily chart. Held this beautiful support, and it went down to a low of 40,000 right here, 40,661. The only thing I do on this chart, I've tried to do as little as I can in terms of notation. I can't help that. Every single thing you see on every one of my charts is notated by hand, by me. So what I'm looking at here is that's an internal low. That might represent the same thing that we saw there back in early August, an internal low without the residual low. And then we had another internal residual low later on in September. So I'm watching this closely, because if that 9-period moving average this week can cross green, that's going to add another little bit to the upside. So I'm watching it very closely. I'll be back. Dow's down 27, S&P's up 5. Nice switch from earlier on. Dow was strong and the S&P was weak. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, we're back, and we're looking at, so this is the chart that I wanted to show you right here, just for a moment. So just to show you, that's that V-shaped pattern. There's the V-shaped pattern. And what's really important is that there's that moment where there's either a gap or you see there's a gap. That's really important. And that normally, a move like this is what I call a takeoff move. A takeoff move says that you started something that should go to at least a peak D, but in fact is a low of serious consequences. It isn't just the low. It isn't just a low. Usually it's like the low. But I can't say that now with all the tariffs and everything that's being discussed. It's just impossible to do that. So all I can say is that we added to our long positions. We've added some positions that we've had before that are really working well in areas that, this is what I decided, that I want to go to what's hot. I've done that for a little while now over the last couple of months. Every time I go to something that says, like the KRE, the regional banks, they should really come on strong. I don't want to be the person that actually is the one that pushes them there, because I'm not able to do that, obviously, right? It takes huge amounts of money to do that. So I've decided that for subscribers, I want to go into what's really working. And now I also need to just talk about something. I had to redo a whole bunch of things this morning because you get to a certain age and you do these dumb things and then you don't know how to undo it. And my newsletter, everything, just the lettering went from 16, the font size 16 to like 20 something, and I had to try to squeeze them all back onto the page, and I messed up. So I had to redo everything that I did, and I was preparing yesterday for today, and then I sent out we got a new position today, something we haven't had before, although I've spoken about it. And it did exactly what I wanted. It pulled back, and then it moved up. It's up like 3% already from where we would have entered. Now, I don't know who got it, but I did send out the whole thing over again a little later on. So it's frustrating. Technology, boy, you get it right, you get it right. When you get it wrong, you don't even know what the heck you've done. So I'm hoping that went out to most of my subscribers. It's a pity if we actually didn't get that position, because I worked so hard. I did the notation. I did everything for it. It worked out perfectly. And immediately, I love when immediately it gives you the gain that you wanted, just to kick off the position, and then you can raise the stop. That's really what I love. Well, we'll see what happens. All right. So let's get back to our story here. So what I wanted to say is, with number one, the TLT is important. That's the bonds. The TBT, which is the inversion of the TLT, hasn't quite made a leg C to the upside. But what I've said for a long time is, yes, on those Wednesdays when the Fed does something, I do talk about it, because it's important that after 2:30 or 2:45, the market's doing something and continues in that direction, and you've got it right. But that's the only thing. What I have said for a long time is that I don't think that yields are as important as they were. And I've done that, and in my, let me just show you this back again. In this particular chart, it was constant over, you see these white rectangles with an internal high and a residual high gave us beautiful sell signals. And look, over and over and over. And then I said, it's not working with bonds anymore, because the market's kind of ignoring bonds. It's other things. So from about November of last year, it's really been other things. From the high of the January high going into February, it was other things, not just yields that were concerning the market. So that is the difference. So I think we're in a different ball game. Well, did I just do something wrong again? No, I didn't. Good. Okay. So now with that said, here we go. Some questions came in. I better get to them right away. Can I look at NVIDIA? Well, we always look at NVIDIA, but I haven't done that today. I looked at the there we go. Okay, now we're going to run this. Let's go. NVIDIA, trading down $1.88 at 119.75. I think that the semis are telling us that we're in a position that says they have been extremely important. They're not quite as important anymore as they used to be, but most importantly, you can't ignore them. They are, remember, I talk about the chips of the semiconductor chips as the oil of the 21st century. Just as we had the crude oil for the 1900s and the 2000s, now we've got something that is equally important, and in some cases way, way, way more, and that's the chips. But there's a lot of competition going. We just look at NVIDIA. It made a spectacular move to its all-time high in the 150s, traded down to the 103 or 4 level, and now it's trading stuck at 119. I remember the other day I said MU is the one that needs to break its resistance at the Chapman wave inside track repellent zone. Three moves to the top, equal time frames, just about equal time frames, and has failed. It's now down at 94. And that just goes on and on. Advanced Micro Devices had some spectacular percentage moves from its low at about 95, trading at 113. But just look at the weekly chart and look at the monthly chart. Ugh. I mean, that is horrible, right? So I'm just saying that NVIDIA, so let me give you numbers. NVIDIA needs to hold 113. If it closes under 113 at any point in the next, I'm even going into early April, that's just going to give that arch formation and say, very weak. We're going to retest the Chapman wave inside track support line back that I've drawn in the weekly chart. The other thing is, if it manages to rally to 124, it's about 5 points higher. And today, it's just acting very pretty. It's glued to the 200-period moving average at 120. But if it's able, then it's got a whole bunch of resistance levels in this Chapman wave inside track repellent zone. Look, right there. So that would be a fabulous move. But if you're looking shorter term, I just say stay away. If you're looking intermediate term, those are the parameters that I'd give you. Certainly under 100. It's at 119. That's like 20% move down. But under 100, it's done for a while. I mean, I'm talking about months. But at this particular point, it's in play, but it's not doing very much. It's not breaking down. It's not breaking up, but it's making lower lows and lower highs. Next question was HII. I think this is one of those that I haven't done any notation whatsoever. This is called Huntington Ingalls. Oh, is this Ingalls? All right, well, I haven't done any work on this. So let me just show you right here. Scroll across. All right, so there's peak A, B, C, D, E, F. And then it breaks down, and it comes down from 300. I think it just missed the round number. 299.50 in the monthly chart, plummets down to 160, and now it's rallying. Weekly chart, 9-period moving average is so close to crossing positive, and that says that 205 HII could get to 222, and the daily chart is making higher highs and higher lows. A, B, C, peak D. Yeah, it's the same thing. So that's 215 on the 200-period moving average. Okay, I've got a little work to do. I'll finish notating it for you, and I'll be right back with HII, which is Huntington Ingalls Industry. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So we're back with the E-mini up 15 right there. Just turned around just above the 200-period moving average. Brand new leg A in the 5-minute chart, A in the 10-minute chart. This is going to be a nice session if it keeps going like that. Just quietly has a normal pullback, then a breather, then it goes on. I like that. We're long, and we're going to try to see if we can stay along through this. Wednesday's critical. It's Wednesday going into Thursday. All right. So HII is, there it is Huntington Ingalls Industries, Defense Designs, Builds, Overalls, Repairs, Military Ships. That's Ingalls, Newport News, Mission Technologies. I just put it in all there because I think it's kind of important to know that. And it sounds great because in this particular era with so many things going on geopolitically, you want to know how the defense area is going. And it just says that in this particular instance, the daily chart has gone from a low of 159. Oops, let me give you the exact 158.88 with 175 round number high on the 6th of Feb, and it starts a brand new peak A, B, peak C, peak D. It's doing very nicely. Yes, I like this at 206.13 HII. I'm just going to say if it goes underneath in the next 3 sessions or 4 sessions going into Monday, if it goes under 196, that's a problem. But if it actually goes even a little higher, then that magnet of the 215, it's called 216, 200-period moving average will kick in. And in this particular era right now, the phase that we're in says, you've got stocks like Raytheon, that's the Iron Dome, which has been very good. It's starting to rally, going to new all-time highs. Even as we speak, it's at an all-time high. You've got GD, which is the General Dynamics, which was spectacular, going to the high back in October, November to 316.90. Then it plummeted to the 200-period moving average at 240 in the 240 area. Now it's up quite nicely. So yes, I think this is in that Lockheed Martin. It's in that area. PPA, let's see PPA. That is the ETF. That's the Invesco Aerospace and Defense Fund at almost at all-time highs. It's got a little bit of work to go to make this cup and W formation going to an all-time high. Yeah, I like it. So HII is in the category that's being kind of favored right now. I like it in the sense that the 9-period moving average is strong. The MACD is strong. The retro strength index is, you can see this right here. It's good, but it's not great. And the MACD started to pull back. It's at 80%. I prefer if it was well over 80%. And the retro strength is also pulling back. But the weekly chart has really started to move, and it's very close to crossing positive. If it does, and it can break 215 by April, early part of April, I think it'll push its way to 222. But as I say, that 190, give it a little room. Yeah, under 195 is a problem in the next week or so. And then Vertex, VRTX. Oh, I've always loved the stock. Never had it. Never had it. Vertex Pharmaceuticals. Look at this. This is a case where I can go to this particular technical tool right here, click on it, and I can put in Vertex. This is now a monthly chart. FRFHF is what it's on right now and still acting beautifully. Now I can't remember. What is that? That was Fairfax Financial Holdings. I did this the other day. So let's see what we can do for HII. No, it doesn't look too good either on the monthly chart because it pulled back sharply and it hasn't crossed positive. Am I looking at it? Yes, I am. So let's go to the weekly chart. Let's go to the daily chart. Yeah, so the daily chart's the only one that's really held this green 9-period exponential moving average. It's getting to a double topish, actually a quadruple, penta something, double top right there. Look how many times it's been here. It needs to break very clearly. Yes, okay, good. Now I'm pleased I did that because it tells me that in this particular chart right here, Oh, I was looking at the wrong chart. How dumb is that? Vertex, VRTX, there it is. VRTX. Now I can go back to that monthly. Look how beautiful that is. Look at that daily. That is here's the weekly. Just turned green, and the monthly chart must have gone pink at some point. No. Look at this vertex from the moment it crossed positive back in February of 2022. I'll go to the high. 254, the low is 225. So 254 to where it is right now at 510. So it's a double. And it's still green, 9-period moving average. I love using this. Isn't this a nice technique? One technical tool, a 914, Chapman wave 914. That's what I call it. All right. So yes, the vertex is looking great. And there's another vertex as well in the tech area. Anyway, so this is peak A. I put that A in. I haven't touched it since then. And look what it's done from the 430 area. Oh, peak A, double top to peak B, and a potential, either a double, that's going to be, let me show you, this is Chapman wave technique. So because that we took out the starting point of A right there in the 390 area, we went down below 380. So this is the brand new start of an up move. And that just says that if we go above that peak D, I can call it E/C, but basically it really is more like a C because this is a brand new, a fresh buy signal to a buy mode. So that's a B. And if Vertex takes out the high of 3 weeks ago, which is at 519.68, goes to 519.69, it starts a leg C, but the high that we need, which being challenged by, is 519.88. Oh man, that's just fantastic. So yeah, and that G, and there's an instant restart. Remember, G is always a G/C. So that says if we go to a higher high to that 520 level, that doesn't become an H. It becomes a G, has to be considered G/C because of the instant restart. This is for those of you who are conversant with the Chapman wave methodology. C, and the next one becomes a D. I could call it an A, but let's just call it a D for now. This is temporary. I'm not going to put it in because it's not there yet. Okay, I hope it helps you. And key support is at 510 right now. Between 500 and 498 is very strong support. That needs to hold. And look, yes, this is an E to an F, and then an A, B, C, D, E. Another E. Oh, this is one of my favorite patterns. Look, it's the falling axe formation. Oops. If you take that out, you go to each one of the left side highs. That would say that if it goes above 513.98 by 1 penny, with a 565, 505 round number. What's that? If it goes above that, then the next level of resistance is 515.67, and then the all-time high of 519.68. Basil Chapman, Tiger Conditions Hour, Dow's up 80, and the S&P is now up 50. Nice session so far. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. So look, the E-mini just made a new recovery high from the earlier high that was made right there at 58.34, and now we've gone to 58.35.25. Now, to me, this is really important. So this is. I had a call this morning from a friend, a really, really close friend. I think for the past 40 years, he's called me on every crisis, and he calls me and says, what should I do? He believes in real estate, so everything that he has in the market, he's always really skeptical about, and no matter who comes into office. And he called me this morning. I don't think he's called me for quite a few years, but he calls me and he says, Basil, should in this environment, should I not take everything out of the market? So I said to him, if you're listening to the media and you're reading the news, and you want to jump out of a window, that's their job. They're very successful. But if you're looking at the market, absolutely not. We've done this before, from going back all the way to 1987, every single major crisis. And look where the market is. It's 6 or 8% away from all-time highs right now. And that's kind of how I feel. And I'm saying to the market, prove to me that anything can happen with the tariffs. But so far, this market is resilient, and that to me is the most important thing. I don't care about interest rates, and now it takes me to the next question. Basil, looking at purchasing a new home with a mortgage, do you think TLT goes back to the highs of the first week of March? Looks like we had volume on 3-4, that's March the 4th. That should be retested on the daily. So, you see, we're in a different position. There are many of us older. We were buying houses when they were 15 to 17 to 18% mortgage. I mean, trying to figure that one out, boy. But the house, it was at a time where the housing market was still going to go higher no matter what happened. Now we've got a situation that's a little different. So people have asked me over the years, like for a son or a daughter looking to they got married or whatever it is, they're in a relationship, they'd like to buy a home. And I always say to them, look, there's no sign outside your house like the stock market that says your house is worth $350,333, and the next day it's worth $353,400. It doesn't do that. And if you live in the house and you love the place, that's where you want to be. To me, that's the most important thing. And then let everything else take its place. Is there a difference between the March 4th high in the TLT and rates today? Yes, there is. But it is so insignificant. Look at the move in the TLT from 179.70 March of 2025, exactly 5 years ago, and to where we are today. So the people that bought then also had the beautiful privilege of seeing their houses double or triple in some cases. So that interest rate that they paid was a big deal. So you're paying interest rate, but look at your house. Your capital has improved. This is a different period now, and you see the way it is. And I think after a 40-year bull market in bonds and a bear market in yields, meaning the rates can get lower, lower, and lower, since for the last 3-4 years, that's not the case. So I'm going to say to you, make that secondary, unless it's absolutely imperative to the quality of the house that you want to buy, because the 0.5% or whatever it is going to make a difference. Let that unfold, and you'll find. I mean, we have some of us. When we did have mortgages, we were able to remortgage. We did a whole bunch of things at lower rates. We don't know where it's going to go, but after a 40-year bull market, I think there's a chance that rates, the normal thing should be rates are going higher because there's demand, because there's building, and there's all this activity. So I'm going to say to you, I can't tell you where rates will be. I can say to you, from my perspective, the rates are fantastically low, having gone through whatever it is, 40 years or more of houses, of buying and selling, and then, of course, maybe just keeping. So I'm not the one to actually speak to that. But technically, for the yields to go lower, bonds, the TLT would have to spiral maybe up into the 110, 115 area. It could do that briefly at some point, but why not look at the house you love, get the house you love. If it's a flip, that's just then you're talking. This is something completely different. Then you remember Tom O'Brien used to discuss this all the time. There are other things. There's a whole bunch of metrics, financial, that you have to look at. But if it's to live in, find a place you love. Always go for a little more than a little less, because I can tell you right now, you always need a little more rather than a little less. And let it unfold and enjoy the house. And if you have to pay a little more, you pay a little more. At some point, it could be work in your favor. At some point, it might, you never know. But I'm going to say to you, I would not make yields, the mortgage, unless you absolutely have to, because it's contingent upon the size of the house you can buy. That's different. Then you have to squeeze, and then maybe you have to wait maybe 2-3 years, and then maybe go to the place that you really want. But I'm just saying to you, find the place you love. See if you can get it. And every day is just a dream, because you're in your place. You don't have to care about anything. And it's not the stock market. You're not watching it going up 1% or 15% or down 20% or up. You're just living in it. And whatever will be, will be. I hope that helps you. So obviously I didn't give you any advice other than to say, if you love the house, buy it. So the other one is, hi Basil, just back from a nice vacation. Yeah, we missed you. That I got a full-on standing order from Swim. This is A2B2 in the den. August call options on Friday's little plunge. What are your thoughts longer term on Swim? Personally, I see the last 6 months as a potential consolidation basing to prep for the C to D leg higher, though I have the monthly at a Chapman peak D. Are we searching for a new A leg? All right, let's go to that. That's Swim. And Dan's spoken about this over the years and many times. It's one that's always had a little bit of a mystery for me, because I've never really found a very good cycle being swimming pools and all that. But in the meantime, there was this huge move up. Maybe it was earnings or something back in early March, and it goes from the 5s to the 7, 7.5, and then it pulls back sharply. So this is what you want to see. On a purely technical basis, there's a potential head and shoulders, but that's not a pattern that I would worry about at this particular stage in the weekly chart. And the monthly chart, didn't I have this all notated? Peak A, B, C, D. Yep, it's in a D, but all the technicals are strong. The stochastic did pull back from very nice in the 80% down to 72%. And the weekly chart, the technicals are not that great, except the 9-period moving average is green. So what I'm going to say to you is, Dan, what I would do with this, I treat it on a short-term basis because it's given back, not all, but quite a bit of that big spiral to the upside. It's a work in progress. It's trying to digest the reality to the dreams of that big spike to the upside, back the low on the at $5.11 on the 4th of March, saw a gap up and a spike to the low of $5.80 and a spiral all the way to $7.72. So now it's come back. I like your plan, and as I'm looking at it, if this thing all the way through end of March into April has not taken out 593, now let's make it reasonable. Let's go to 560, but move it higher. That's what you're looking for, and that'll give you that big move to the upside. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just finish swimming. Latham Group Inc. designs, manufactures, markets in-ground residential pools. Trading right now at 684. Dan, someone must have heard you because it's doing very nicely. Oh, I didn't mean the upside. If it breaks into the 720s in the next day or two, that's really good action because it's broken the resistance line, and that says it can go to the 740s and then 750s and retest the high. This is the moment. It's March. Yeah, going into April. This is a good time for the pool business. All right. So with that said, let me do a couple of things here. Just real quickly, the futures, higher highs and higher lows. Oh, man, this is really nice action. So let me just do this. So I want to just recap very briefly. So we went back to long 3 times long. The Dow, small position, but 3 times long. It's aggressive. The Dow itself, because I like the action of the Dow. I'm waiting for the 9-period moving average to cross positive. When it does, and if it does, instead of if it backs away from this and deflags lower, that'll be negative. But the MACD is already good. The stochastic finally is improving at 56, still not good enough. So it's in a buy signal. By the end of the day, I might have to upgrade it to a buy mode, meaning it should pull back, make a peak C, and then a D. My target is the 43,100 level if we close nicely today. That's really important. So that's that. The couple of things we're looking at here. Silver, we're still long our silver position. Silver's doing really nicely. It's trying to play catch up to gold. It's got the cup formation. I'm anticipating that it gets to 35.75. In the financials, the XLF is doing okay. It's actually a nice V-shaped pattern, and the weekly chart has just held the 9-period beautifully. So our Bank of America, which we are still long, is doing very nicely. So we've got some long positions added to the long positions. Oh, I had a question about Robinhood. Robinhood, as we go out, you can go to Steve Rhodes right away. Robinhood is down 5 cents at 48.31. This is nice action. It needs to get to the 53s quite soon. That'll